Gary, good to see you again, but how are you dealing?
I was absolutely surprised when I saw the markets break through 1200. Of course, last time we talked, I was really hoping and looking for a double bottom, and that double bottom was really based on a 50% retracement at 1335, and as the market moved down to that point, it actually did touch on that, move back off, and then went through. It went through hard, and really what we saw was a meltdown in the precious metals markets, there's no doubt. The next number that I was looking for was 1277, and when it broke through that, it really had nowhere to go until it hit a 61% retracement. And the 61% retracement took us between 1185 and about 1202.
Gary, we used to speak about the probability of $1,200 gold. We've hit that. Is 1,000 next?
I personally don't think that it will trade to 1,000 or below that. A 78% retracement is really going to take us roughly to 1030. And if it cannot hold in this particular area of 1200, that would be the next real level of retracement that I'm looking for.
Technically speaking, Gary, what would need to happen to propel gold prices higher?
Well, obviously, for prices to go higher, there have to be more buyers than sellers. And the question is, what will precipitate that? Right now, the bulk of what we have been seeing is really on the side of paper gold, meaning big institutional traders, and they have been moving money out of gold, and they have been moving money into other investments. In terms of the long term, and that's how I need to look at the market, the one thing that's really going to prop the price of gold back up is that when we look at basically what caused the beginning of this drop, and that was the fact that the announcement came from the U.S. Fed that we would begin to see tapering within their quantitative easing program. And that's really what started this slide. And you have to realize, why are they tapering the quantitative easing program? They're doing it because the economy in the United States is really beginning to kick off and really beginning to go back into gear. As we see our global economy and other countries follow suit, and we see a robust global economy, then you're going to bring in inflation. And of course, inflation is one of the primary movers of gold to the upside.
On that note, Gary, what segment have you brought to us today?
Today's insert is going to be about Fibonacci retracement and looking at the possibility whether or not 1200 will find a bottom and we'll see it move up, or whether or not it has the potential to slip back lower. We're going to postulate both sides of that fence, so to speak.
I'm sure our viewers will appreciate it. Let's get to it.
Today, what I wanted to do was to address my long-term and interim view of the gold market. There's no doubt we have been under some of the most severe and heavy selling pressure probably that we've ever witnessed. When we consider that this market, since let's say October of 2012, and of course that was the last time that we saw gold anywhere near 1800. Since October, we've pretty much had a straight down channel as this market broke through any kind of level of support. Obviously, I've been asked the question, what would it take for the gold market really to turn around and start moving back up? The answer is simple and complicated. The simple answer is you've got to get more buyers than sellers. Right now, we have more sellers than buyers. We have noticed that whereas the large institutional traders, the fund managers have been pulling money out of gold and moving it into other vehicles that they thought would have a better return, what we have seen is that we didn't get any of the physical buying picking up the slack. Now, we're looking at a 4-day chart. It's in standard candlestick format. And really what I wanted to look at today was the different Fibonacci levels and the level that we're currently at. The last time we did a chart this, I was looking and really hoping for some sort of support to come in the marketplace itself. And as you can see, this is a 61% retracement. This is a short retracement, which begins at almost just under 1100 to the record top. The secondary retracement starts at about 750 all the way up to the top. And the double bottom that we were looking for was based upon a 50% retracement of this large move. Large move meaning from here to the record top and then coming down and forming some sort of a double bottom. The bottom that I was looking at really was based upon the fact that we found some tentative support, and of course that was obviously very, very short-lived, because what happened was we saw the market come back up, top out at roughly, I think it was around 1440 right in here, but then it really came down and came down hard. Now the interesting thing is that when we look at these Fibonacci numbers, and these Fibonacci numbers of course are really forecast with our first move up. So these are already pretty much etched in stone when we look at this large move up and then start looking at different retracements. 50% absolutely, you can see that did not hold. And you can see though that it was in essence attempting to find some support. You can see that with these two bottoms right in here. But also the other thing that we notice is when it broke through this particular point right in here, meaning 1344, 1335, it really came down hard. Now, we are currently at a 61% retracement, and that 61% retracement is anywhere between, say, 1185 and 1203. And as you can see quite clearly, we are attempting to find some support in that area. This was recorded on Sunday. The market has been trading as high as, I believe, 46 today, 1246. It's currently off about $5 to $7 on the day, but we do now have a green candle. So the question remains, just as we looked at the market right here when it hit a 51% retracement, the real question is whether or not this will hold. If it will hold, I will not consider this any kind of a run unless it breaks above first this 76% retracement on the shorter fib retracement, which is at 1273. A move above 1273, and we can honestly say that we see some technical evidence forming that we have completed this downward cycle. If we do break through this particular 61% retracement, all bets have to be off, and the next real level of support doesn't come in till about 1030. So this is a very, very critical area where we're at. We'll just have to see how the market reacts to it, and if we get some buyers coming in, especially at this area. Now, for those of you who would like to dive into this topic a little bit deeper, I do have additional bonus content available to Kitco viewers. You can get there from my front page, my website. That's, of course, thegoldforecast.com. Simply scroll down to the bottom and you'll see this little copyright right here. Just go ahead and click that. And if you're a regular viewer of Chart This, I do recommend that you bookmark the Kitco bonus content page. Again, Fibonacci retracement and how it lends insight into today's market volatility in gold.
Gary, thank you for that. We'll see you again soon.